This conference will now be recorded.
Okay, so let's do the whole thing one more time. First thing we want to do is get the unit cost. So our ink is 1 at 10, $10. Our paper is 1 at 10, $10. Our labor, we can make we can make two, takes us 2 hours to make one book, and the labor rate is 5. So we're gonna multiply because it takes more than an hour to make the book. So the labor is 10. Okay. Down we need the overhead. And I'm gonna come back to that overhead because we're gonna come over here and work on the POR. And so in working with the POR, to get that, we said, what's the amount? What's the amount on the first line on that template?
The total overhead.
And that's gonna be what?
200,000.
What's on the second line?
The total quantity.
10,000.
So how many are we supposed to be making?
10,000.
10,000. Now this is on the template. What's gonna go on line 3?
2.
The productivity rate, which is 2 hours per book. What's on line 4?
The estimated labor hours, 20,000.
We multiply lines 2 and 3, since it's 2 hours, more than 1 hour. And so the total labor hours is going to be $20,000. So now to get the POR, what's the POR going to be? How do we get the POR?
POR is 10. Divide lines 1 and 4.
Say that again.
Divide lines 1 and 4. So it's 10.
Divide line 1 by line 4. And so we get the POR, which is what? 10. Okay, 20,000 in the net. So we get the POR to be 10. Okay. And if we want the unit overhead costs, what do we do to get the unit overhead cost? We go back to this productivity rate, right? Which is 2 hours per book. And what do we do with the 2 hours to get the unit cost?
Multiply by 10.
We multiply lines 5 and 6. And therefore, 2 times 10 is what?
20.
20. So sometimes we can shortcut it and just divide 10 into this, but that template that you have takes you through how you do it also. Now, are we clear on how to do the first part of it? So our estimated overhead on a unit basis is going to be $20. So now our total estimated unit cost, 10, 10, 10, and 20, is going to be what? 50. Selling price multiple is 4. So what's the estimated selling price? Estimated selling price,
200.
200.
200. And our POR that we just calculated is what?
10.
10.
10. Everybody do that now?
No.
And
Hey,
make sure office hours tomorrow. We'll practice another one.
Hey, I missed kind of the first part of it, Professor Boyd, because I don't have the book, so I was kind of, I didn't want to interrupt, but I kind of missed where to get the 200,000, how you get the 200,000 and stuff.
200,000 is the overhead. Okay. So on line 1 is total overhead.
Well, I'm saying where'd you get it from?
Right here in the assumptions. These are the assumptions in here. So we're using these assumptions and using them. So are we clear now on it?
Professor Boyd, how did you get the 200 for the estimated selling price? Did you do 10 times 20?
No. The selling price multiple is 4. The estimated unit cost is 50. We multiply 4 times 50 to get 200. So
Okay.
once you get your unit cost, you utilize the selling price multiple to come up with the estimated selling price.
Okay.
Any other questions on this? If not, before I go through these. All right. With these assumptions, make those same calculations. Don't need to go any further if you can't get this right. So these are the assumptions. I want you to calculate the estimated unit cost, estimated selling price, and POR. You have 2 ink cartridges. You have a labor rate. You have your productivity rate. You have your estimated overhead. You have your selling price multiple. You have your estimated quantity. So with these assumptions, you're supposed to be able to calculate this. Okay. What's the cost of the ink?
$10.
What's the cost of the paper?
$10.
What's the labor cost?
$10.
It's 2 books per hour, so we divide 10. Okay. So now we have this information. This is what that chart looks like to calculate POR. I could make it smaller. Okay, so using this chart, you just have one product with the information from above. So you got this information here, correct?
Right.
Now go through this chart to calculate your unit manufacturing overhead costs and your POR. So utilize this chart to do that.
Hey, Professor Boyd.
Yes, sir.
Um, can we do a tutorial tomorrow?
Well, we plan to. That's what we normally do on Wednesdays at 3 o'clock.
All right, I'm gonna put it on my calendar.
Oh yeah, put it on your calendar.
That'll be facetious.
And remind some other people on your team about it. Okay, so we fill this out. What's going on this first line?
200,000.
All overhead, same thing. Quantity to be produced,
10,000.
labor productivity rate,
2.
it is 2. But it's 2 what?
2 books per hour.
2 books per hour.
So what's the total estimated hours gonna be?
5,000.
5,000.
5, because we can make more than 1 in an hour. So the POR,
40.
line 1 divided by line 4, 40. Now we want the unit manufacturing overhead costs. So the POR, we're gonna go put that here. We got that down. Then for the unit manufacturing overhead costs, what are we gonna do?
Divide.
The POR divided by the productivity rate.
The divide, so this is gonna be 20. So we bring that 20 up here for the overhead in terms of what it's gonna be. And sometimes you can just divide 10,000 into this and get it sometime. We add all of these up, how much do we have?
50.
Selling price multiple is what?
4.
4.
Oh yeah, selling price 4.
And so our estimated selling price is what?
200.
So if you miss this, you get a 0 on your midterm, okay? Well, you have most other stuff wrong. So you need to get this right. You get your midterm. I would suggest you let everybody independently calculate these 3 numbers. Then you come back together and check it to make sure this is right. But if 3 or 4 or 5 people can't get this right, then I guess you deserve a 0 for the midterm. Okay, my estimation.
Right there for a second, Professor Boyd. I'm trying to, right there.
Are you
No,
trying to
right back.
print?
No, I was looking at the up top. The
Where?
page before. This one, yeah.
Oh, you're trying to print this page.
No, I'm not trying to print. I'm looking at it. So
Okay.
basically, Professor Boyd. So basically, for looking at column 2. So basically, what happened was you reiterated. Excuse me. You reiterated the total number, the total amount of money you spent on the ink and the direct materials, and then under the direct labor, you divided the amount of money by how many books per hour you're going to be doing, which gave you 10. Then you divided 200,000, the estimated, what is that? What does that stand for?
Estimated manufacturing overhead.
Oh, so the overhead charge. So you divided that by the estimated quantity, which is 10, and you got that 20, and then you basically added all of that stuff up to get that 50, and then you just and then basically the selling price is by 4 times that 50 to get your estimated selling price or whatnot, right?
You must have been missing a few days.
I missed a few days, so I'm trying to catch up fast.
Okay. Okay, so
that POR was given to us, right?
no, you calculated it. You calculated it using this template. You got 40. You calculated it using this template.
And it's talking about the total overhead divided by the estimated labor hours. So the estimated labor hours on that other chart was not 5,000 though. Where'd that 5,000 come from?
It changes based on your productivity rate. In the last one, it took 2 hours to make the book. You multiply it. In this one, you're making 2 books per hour, so you divide. So you got
So it basically what they give you for the productivity rate.
Yeah, you got to read it. Is it 2 books per hour or is it 2 hours per book? You got to make that determination.
Okay. But that part will be given.
Yep, all of this is given. These are the assumptions.
Okay.
So you're ready now, right?
Yeah, let's do one more. Just make sure.
Well,
We have time. Yeah, okay.
Because you got to go through this problem now and make these journal entries.
Okay.
Journal entries are by stage: the acquisition stage, the production or work in process stage, the finished goods stage. And you got to journalize each entry, post to the ledger and the selected T accounts, prepare a cost of goods manufactured statement, a cost of goods sold statement, and an income statement. So that's what you're required to do here. This is what the team will be required to do on Thursday.
Wait, so the assignment that you posted on Blackboard, it was due today, right?
Mm-hmm.
It say on Blackboard it's not due to the 13th.
Well, we don't worry about that right now. All right. We're going to try to go and work this problem to show you what you need to do. So we're just taking these amounts out so you'll see them come in as our magnificent team shares. So your job tomorrow on Thursday is to be able to put those things back just as fast as I took them out.
Professor Boyd,
Are we ready? This is team 5, correct? I wanted it. Okay.
No, that's not our.
That's
That's
not
team 4.
I mean team 4, okay.
Oh no, that's team
No,
5. You're right. That's team
4.
5. It's
That's
team
team
5. You're
5.
right.
Okay. In stage 1, this is where we buy the raw materials. So that's the acquisition stage. So what we're going to do when we make the journal entries,
so that first journal, right? Since it was so you're gonna debit the ink and then the raw material, and then you're gonna credit the charge or the money.
You credit accounts payable.
on credit accounts payable. So how much ink did we buy?
120,000.
We bought 12,000
About
cartridges at
2018.
10. So that's 120,000, correct?
Yes.
So we debit raw materials ink for 120, and we credit accounts payable for 120. And you notice here, I won't put it in, but I had these stages here sort of help you out. Then once we do this, we got to go to this raw materials ink and put the debit in. Post it. We're only posting these selected accounts, so we don't do a complete posting because we're simply working on the overall process. Then we went up here and we bought some ink. 12,000 at $10 again. 12,000 reams of paper. So we're going to debit what?
Raw materials, paper.
Raw material, paper, and credit accounts payable.
So, Professor Boyd, when we're doing these journal entries, is it always the assumption that we bought them on account?
Yeah, inventory. You always buy it on account. But that's not an important factor.
Okay.
What we're doing right now. Then we have to post this into the T account. So we just got the manufacturing counter. We posted one-sided on this problem because we just trying to do the selected things. And once you get to your study problem, you have to post everything. Okay. Stage 1 is over. We'll go to stage 2. In stage 2, because we're making 10,000 units, we transfer in, since it take one ink cartridge, we're going to transfer in just 10,000 ink and 10,000 reams of paper. We buy more, but that's all we're transferring in. So once again, as we move to stage 2, we have the journal entry where we're going to debit what?
Work in process.
We're going to debit work in process. And we're going to credit the raw materials ink. How did I get down here on this line? And how much is this going to be?
100,000.
And we're going to do the same thing for the paper. We're going to debit. So in stage 2, debiting work in process. And we crediting these raw material counts. And in this case, they just happen to be the same amount. They don't always have to be the same amounts. And we'll help somewhat, we just say we're in, this is stage 1. Stage 1. Now we're in stage 2.
Yeah, that'll make it easy to remember where you were.
We
Oh,
in
what?
work in process and cash?
Say what? So we finished with stage. We just got the first 2 entries.
Oh,
Then our third entry, we recorded the payment of 20,000 actual labor hours. And I think we may have changed this, but just change it for what you have to 20,000.
Hey, Professor Boyd, real quick question. So on stage 2, you see how you know how you said that for this particular stay right. Where you going? No, go back up to the journal, the actual journal problem. You see how you said that in stage 2, it just so happens that the journal entries use the same amount.
Right.
If for some reason, say for instance that number annotated 12,000, well, I guess the number shouldn't be the same.
They'll be different on Thursday. These 2 numbers will be different on Thursday.
Well, I'm saying, so how would we go back and would we use the first stage numbers to recalculate how we find what those total numbers are? So, for example, if number 4 was 5,000 and number 3 was 10,000, how will we recalculate number 4 if it annotated 5,000? Will we go back up to?
Go back. You're making 10,000 books. Okay.
Right.
It tells you, it takes you 1 ink cartridge and 1 paper. Okay. And so right away that as you get into this stage in terms of transferring in, you got to transfer in 10,000 and 10,000. If it took 2 ink cartridges, so if this said 2 ink cartridges, then what? You would need to transfer in 20,000 ink cartridges, and you would have bought more. Got it?
So yeah, okay. So we'll know the change. It'll be obvious that the change occurred. Okay.
The assumptions will have it laid out.
Okay. So it all goes back to the assumptions, basically.
Correct. I'm gonna go ahead and post those. So we have the 100,000 for the ink. We have the 100,000 for the paper. And so the balance in ink at this point is going to be 20,000. And the balance in paper is also going to be 20,000. Okay. So we just posted these selected accounts. Now, let's move on to closing entry 3, excuse me. Stage 3, record the payment of 20,000 actually. The workers were paid at what? $5 per hour. Okay. And so what's this journal entry going to be? They worked 20,000 hours. They got $5 an hour.
So you're gonna debit the working process and then credit the accounts payable.
Cash, workers want cash.
Oh, that's right.
And that's 100,000. And we're still in stage 2. We have one more entry in stage 2, which is record the applied manufacturing overhead at the POR. So we got to record the manufacturing overhead at the POR. So what are we gonna do? What are we gonna do?
So first we gotta go back to the assumptions, right? To see what
Right.
remember the PR was, which is 10. So
Multiply
Multiply.
20,000 times 10 will give you 200,000.
We're gonna multiply it times the labor hours. Because remember, we're using the labor hour to allocate it. So we're going to debit working process once again, and we're going to credit manufacturing overhead. Still in stage 2.
And then for this, we multiply the POR by what?
The labor hours.
The labor hours.
That's why we calculate the POR, because as we get into making the item, we don't know how many we're going to finish making. Labor hours is a better determinant of that.
Okay, so POR times the 20,000.
Correct. Now let's go and post that. So we post the debit the working process and where we're going to put the credit.
Manufacturing
Manufacturing.
over.
Put the credit in
Professor
manufacturing.
Boyd.
This
Professor
is,
Boyd.
this is the estimated overhead.
Professor Boyd, Kiera trying to get your attention.
Okay, yes.
Yesterday for number 5, I believe the one when we did the cash, you had us for some reason we had a different number because you don't want everything to be 100,000. We had 200,000 for the last 2 as well, but you did 100,000 this time.
Okay, well, let's look at it. 20,000 times.
Yeah. So I think we multiplied it by 10 because it did say 5 an hour, but it said it took 2 hours.
Multiplied by 5. So we did 10. That was incorrect. You have to, you're paying them $5 per hour. So in terms of costing out the book, that's a good point. It takes 2 hours per book, so it's 10. But you aren't paying them $10 an hour. So once they come to the hours they work, you have to pay them times that. So it should be 5.
Change what we did yesterday.
Yeah, so it should have been
And
5 times it. So that's a good point.
So Professor Boyd, question: when we're doing that journal entry, it's more so tracking to make sure we don't exceed budget for the manufacturing for the factory, basically. It's make sure we don't. It's making sure to ensuring that we don't go over budget, so we're not overpaying them for the amount of work that we're having them put in.
Well, you're reflecting what actually happened. Now, they were supposed to work so many hours. And in this example, we have it all kind of the same, but sometimes that's going to differ. So that's a good point. You don't use the total product cost. You have to use what you're paying the person. So it'd be $5 per hour. So if I, indicated the other, then this is what it should be.
Mm-hmm.
So we apologize for that misrepresentation on yesterday. Okay, so now we have all of our steps finished for step 2. Now we go to step 3. Stage 3, finished goods, completed 8,000 books. See, we didn't complete 10,000, we completed 8,000. With the raw materials cost transferred for completed books only, and 100% of the labor and manufacturing overhead transferred to finished good. So what are we saying here? If we go to the T account, we transferred the cost in based on 10,000 books being completed. But in actuality, only 8,000 books were completed. Okay. Did I put my manufacturing overhead in here? I missed one of the 100s, I think. Let me put 100,000 here for the labor, then 200,000 for the overhead. Okay. So this is paper and this is ink, and this is ink, or ink and paper. When you don't complete those books, the ink and paper will still be here. So we only transfer out 80% of the cost of those. And I got this is in red because it represents, it's not the journal entry, but it shows how we calculating the amount that we're going to transfer out. But we're going to transfer out all of the labor because the workers have been paid and are spending their money, and the overhead goes with the labor. So when we total these up, we have what? 3 and 2, what, 500,000 over here for the working process. But we're transferring out only what, 460?
460.
That's a key number. And the balance in this account is going to be 40,000.
40 years.
So what?
Nothing. I was nothing.
Okay, so 460 is what we're transferring out. We always, in this chapter, we're transferring out only the percentage of the raw materials that are completed. We're assuming the remainder of the raw materials are still here. And that will be the case in job order costing. But the workers have been paid, the manufacturing overhead has been incurred, rent, depreciation, all of those things have been incurred. And so we transfer all of those out. So when we get ready to make that journal entry, as we move to stage 3, what are we going to debit?
Yeah, what? The manufacturer, the overhead?
No, bad guess. We're going to debit finished goods inventory.
I knew that.
And credit what? Get another guess.
Process.
Work in progress.
Inventory. For the 460. Okay.
Can I ask you a question, Professor?
Mm-hmm.
So my when I was doing my problem, it was similar to this. And so you see how we just took that number and we used it to start our finished goods in stage 3 journal entry.
Mm-hmm.
So doesn't that mean, but like once you add that 460 to that side, to the debit side of finished goods, doesn't that 460 also have to be a credit somewhere else?
Yeah, it's a credit right here in work in process. You debit finished goods and credit work in process. So once again, we buy the raw materials.
Oh, I
Then
see what you're saying.
transfer them in the work in process. And we bring in the processing cost, labor, and overhead to make the item. Then once the item is made, that's our goal, to make the item. Then we transfer the cost out of work in process to finished goods.
Oh, I see now. Okay, I see now. Thank you.
You're welcome. Okay, so the total completed was 8,000, right?
Yep.
So now we got to go through and calculate our actual unit cost. So we'd estimated it before, but it may be a little different. So we divide 460,000 by 8,000. How much do we get?
You said divide what? 460 by 8,000?
Yeah, because that's how many we completed. That's the cost. So if we divide,
50.
how much?
5750.
57.50.
So we go and we plan and we estimate a cost. And we go back up here at the top of the problem. we're supposed to be at a cost of 50. We still gonna sell at 200, but now we have a different cost of 57.50. So this is the actual cost we have to use when we get ready to transfer cost of goods sold. So that is all that we do in step 3. Now we go to step 4, the 3 transactions. Sale of the finished goods. How many books did we sell?
6,000.
6,000.
So 6,000 books.
6,000.
Okay. So
8,000. We sold 6,000.
we're going to debit cash. And what we're going to credit?
Sales.
Sales. So all we're going to do here is we're going to take the 6,000 times 200. So how much we going to get for selling the books?
1,200,000.
How much?
1,200,000.
All right, 1,200,000.
Can you tell us what we would do if we had a beginning inventory?
Yes.
Because I had one on my problem.
It would not affect this journal entry. Okay.
Right.
But going back to your inventory accounting in Principles 1, if you had a beginning inventory, then you would have to have an inventory costing method, FIFO, LIFO, or weighted average. Okay.
Hey, Professor Boyd. So you said it wouldn't affect, but wouldn't it though? Because you said if you go back up,
Selling price,
stage
it
3.
won't affect sales. But you
But
have
what is
the
stage
you have
3 though?
companion entry where you got a debit cost of goods sold, and then credit finished goods. Remember that entry you make whenever you sell something?
Yeah, but wouldn't it affect the so if on stage 3 we were just saying that since we didn't make as many as we originally planned, we had to go back and recalculate the unit cost. So wouldn't having a starting inventory affect the unit cost as well? Because it would increase the amount of inventory that we have.
Why is it going to affect it?
Because we have more inventory, right?
No, it's not going to.
Professor, can I tell you what I did for my problem?
What problem did you work?
I did 10.7, and so we had a beginning inventory of 5,000.
Did you do the right 10.7? I'm wondering.
What do you mean the right 10.7? I did the one before this.
Okay. And you had a beginning inventory?
Yeah, I had a beginning inventory of 5,000, and they cost $40 each. So what we did was one cash transaction for the sales, and then 2 cost of goods sold, because we used the multiplier for our estimated selling price, and then the multiplier for the selling price that you gave us, right? So I take 5,000 from there, and then we sold 7,500 to make the 8,000. Does that make sense?
I think you'd have one sale, okay?
Yeah, one sale, but would it be 2 cost of goods sold and finished goods?
Okay. You're still gonna have one sale at your selling price, your current selling price, and this is what you're gonna do. Then when you get ready to go to cost of goods sold, you're gonna say, well, let me see, what should I do? Let me go back to principles 1. I need an inventory chart. And I'm gonna go in my inventory chart with some assumption of FIFO, LIFO, and weighted average. And I'm gonna get into that middle column and get my cost of goods sold. You remember that?
No. But I know that we're supposed to use the 5,000 first, and then we put the remaining from what we have.
Using FIFO.
Well, it told us to use weighted average.
Use LIFO, or you could use weighted average. So you'd have to have an assumption for that.
Okay, I'll have to probably just ask you tomorrow then.
Okay.
So what you were explaining before, why having when you have a previous, why having more inventory doesn't change the unit cost? You were explaining it.
Same type of ration. Now, what we did with that unit cost was to come up with a selling price. Okay.
Mm-hmm.
Now you can't go up here and change the selling price unless you're selling gasoline, and they can't change it. Once you publish what you're selling something for, that's it. So you're selling your product at Amazon at $200.
But that's what I'm saying.
You can't go and change the selling price. That's the bottom line.
Yeah, no, I get that. No, but I'm saying though, your estimated quantity changed. So wouldn't it change?
What's quantity change?
Because if you have
you already got some and you're making some more. There's no impact on. This is a new year with some more inventory. So
it's totally new calculations, is what you're saying.
You would already have calculations. Let's see if we can get to that in a second. Now, right now, and we'll come back to that, we got 6,000 units. And those are good questions. We have 6,000 units. And our calculated unit cost is how much?
$57.50.
$57.50?
Mm-hmm.
Okay, so 57.5. Yeah, parentheses. And so what's 5750 times 6,000?
345,000.
How much?
345,000.
345,000.
345 sounds better. Okay, so we're gonna have to credit here for 345, correct?
Mm-hmm.
Because we sold 6,000. So how much is that gonna leave in this account now for finished goods?
115,000.
200. How much?
No, 115. 115,000.
Now I'm gonna come back to this finished goods account in just a second. So cost of goods sold is now gonna have a debit of what? 345, right?
Mm-hmm.
Sales has this credit of $1.2 million. Okay. Okay, let's go back to the situation, we already have some inventory in here. And so let's assume we had 1,000 units in here. And the cost of 1,000 units let's assume the 1,000 units did cost $50, okay? So we got there. So when we get to this T account now, we'd also have how much in the T account. So we're just putting this in. Let me put it in red, I guess. We'd have 50,000 in the account, okay? And we'd have 1,000 units at 50, or we'd have 8,000 at 57.50. So Joanna, if we were using LIFO and Terrell, then it wouldn't matter. We would still, the cost would be the same thing. But if we were using FIFO, we'd have to pull out 1,000 units at 50,000 as being sold, and then the other 5,000 would be at the 57.50.
And that would be under the cost of goods sold, finished goods, journal entry, right? The two of them?
Correct.
Okay.
Still gonna be one journal entry, okay?
Yeah. But you have to do them to make it.
To a FIFO chart type of situation to calculate it, okay?
Okay, well, it was weighted average.
Then you would use weighted average.
Okay, thank you.
Okay, so it's only one journal entry as we pull that in. Okay. So we've done that part of stage 4. Now we got to record the actual manufacturing overhead. So we estimated manufacturing overhead before, but now we're going to record the actual. And that total is 190,000. 100 depreciation, 90 other expenses, which we have to pay cash for. So we're going to go down here and debit manufacturing overhead. For 190,000. And we're going to credit accumulated depreciation for the 100,000. And we're going to credit cash for 90,000. So that's what that journal entry looks like. Now we're going to go to manufacturing overhead and post the actual cost, 190,000. So we estimated the overhead was 200, it's actually 190,000. So we over applied the overhead. We over. So let's see, this is still stage 4. So we still now have to finish up, record over and unapplied manufacturing overhead. And when you work with this entry, as I explained yesterday, the overhead T account has to go to 0. So the only way that's going to happen, we got to debit manufacturing overhead. And when we do that, that's going to move this account to zero. So we have to wipe that out. That account is now zero. So we debit manufacturing overhead for 10,000, and we credit cost of goods sold for 10,000 because we put too much cost in there. We overestimated the cost. The stage 5 entries, sales salary, 25% of sales. So what's that journal entry going to be?
Debit sales.
Well, we're going to debit sales now, sales salaries.
Yeah.
And we're going to credit cash. Well, how much? $1.2 million said it was what, 20%? 25%? So how much we going to pay the salesman?
300,000.
300,000.
Out.
Because we like to pay salesmen on commission. Then the administrative expense was what? Rent's 200,000. So we debit rent for our facility. Credit cash. Any question? So with our journal entries made, V for we've been victorious and getting those journal entries made. We now need to do a cost of goods manufacturer statement. And there are going to be 3 components of the statement. Direct materials or raw materials, direct labor, and the applied overhead, not the actual, but the applied. Okay? So let's begin with raw materials. And we just go to the T account for raw materials. We purchased 120 and 120. So how much did we purchase in raw materials? 0 beginning. We purchased 240. Ending raw materials were 20,000 and 20,000, 40,000. And so raw materials used in production, 200,000, which agrees with what's in that work in process account, 200,000. The labor was 100, the manufacturing overhead 200. So we just pull those right out of this work in process account. So the labor is 100,000. The overhead was 200,000. So the total cost, total manufacturing cost, is going to be 200, 100, and 200 are what? 500,000. There was no beginning inventory. We had an ending inventory in manufacturing overhead, in work in process of 40,000. And so the cost of goods manufactured was 460,000. We said that consisted of what? 8,000 units. And what was our unit cost? $57.50.
Mhm.
So this new schedule details how we come up with the raw materials total cost and unit cost for this period. If you have prior costs in there, they're there from a prior period. Companies make items each year, each period, and they're different costs. And then they're going to use FIFO, LIFO, weighted average in terms of making the transfer. Cost of goods sold, there was no beginning finished goods inventory, 0. We simply bring down now the 460. So that's the cost of our goods finished. Less the ending inventory, and our finished goods ending inventory was what? 115,000. And so the unadjusted cost of goods sold, was 345,000. Then we have to adjust for that overhead. Now we didn't post that. I think we partially posted, but since we debited overhead, we needed to credit cost of goods sold for 10,000. Okay. So the balance in this account is now 335. And so we're gonna come in here and we're gonna deduct the over applied. And we're gonna get the same number, 335,000. Can y'all do an income statement by yourself?
Should be able to.
Say what?
I hope so.
Just in case. Sales is what? 1,200,000,000. We bring down this adjusted cost of goods sold. Paste. Then we're gonna put the selling expenses in here, which were what? 300 and 200. I'm assuming you can take it from here. Any questions? Any comments on what you're gonna have to do on Thursday?
No, Professor, I have to log off. I have a meeting, but I will see you for tutorials tomorrow with all of my questions.
Okay.
Professor Boyd, I have to get off as well. I have work at 6.
Okay, so
but I will be.
We're finished.
Okay.
Sure you attend office hours if you need to. I think y'all need to.
Yeah, I'll be there tomorrow. Ooh, that was shade, but I'll be there tomorrow.
Okay. Okay. See you all tomorrow.
See you tomorrow.
We're not going to finish this test in time, Professor Boyd.
If you allocate it to each team member, you will.
I want to say it's a lot of steps.
It is. It is. We'll see.
It's like a lot of steps. Because when Kiara was showing me, I was like, this is a lot of steps for us to not finish. Well, to try to complete a test within an hour.
Yeah.
You got more than an hour.
That's if you come on time.
Oh.
I tell you.
I'm
You
just
have-
saying.
You have your assumptions, you have your assumptions, and you have 12 journal entries. So if you got 3 or 4 people, you give each person some journal entries.
Okay, can we go over the journal, like how the journal entries tomorrow, Professor Boyd?
Of course.
Okay, I'll see you tomorrow at 3.
Okay.
All right. Thank you.
You're welcome. Make sure you're there tomorrow, Clifton.